Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. If you like making money, if you're looking for investment opportunities, I would click subscribe. I talk a lot about commodity and undervalued investment opportunities. That's what I'm doing in this clip here. If that sounds interesting, definitely subscribe, join our community, ride this commodity bull market up with everyone on the community. And we share a bunch of different picks, individual stocks, mutual funds, ETFs. It's a community that tries to help everyone out. So in this, I'm going to go over kind of what I hold in my 401k and what I hold for mutual funds and ETFs. So you're going to see what I hold and why I hold it. So here it is, mutual funds and ETFs. These are the ones that I hold. There's some mutual funds and ETFs from my 401k. I can go over why I hold them and why I think they're good for a long-term investment over this next commodity cycle. Again, this is not financial advice, simply education. This is something that you can do more investigation into if you guys are interested in some of these mutual funds and or ETFs. So the first one here is the VanEck Vectors Rare Earth Strategic Metals ETF. This one looks very compelling right now. Right now being like right now. So we've had this very long decline, down, 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 down. And we've got this double bottom pattern that's happening, and we're about to break out of this just gigantic base. I like this thing right here. You can see the volume kicking up. Someone's buying the living heck out of this stuff over here. And I think this is going to be an absolutely excellent play for the next commodity bull market. The expense ratio, I think it's about 0.6. So it's not too bad, but you get a lot for what you're buying here. So these are the companies that they hold. We've got Cobalt, Molybdenum, Galaxy Resources, China Northern Rare Earth Group, or Cobra. I think that one's a lithium play. A lot of these are rare earths, lithium, cobalt, things of that type. There's a titanium company. And a lot of these companies, the reason I go into this one is I can't buy a lot of these. I can't buy this one. I can't buy this one. I can't buy a lot of these rare earth Chinese companies. So I put some money in here. It's a decent holding. And if you look back here, this thing moves quite substantially, $30 to $80 in about a year, a little over a year. So this thing can move when it moves. So it does have a lot of leverage, does have a lot of volatility, but it's one that I like to add into because I think rare earth metals, if we go forward in a renewable world, rare earths are needed. And I think the price is going to be much, much higher because we're not really extracting that much rare earth metals in relationship to the production that I think that's coming. This is a growth of a hypothetical $10,000 investment. Since 2011, it kind of moonshot and then it just bled off. And we can see this momentum starting to turn. And I think when we break this line here, it's going to be game on. We're going to see a very large move. So that's one that I hold. Here's another one, Vanguard Materials Index. I've been holding this one since somewhere in here. You can draw this line in here. Well, here, one thing. This thing's been pretty steady on the up move. So whoever's managing this is doing a pretty good job. Then you get this kind of like bowl shape almost cup and handle pattern right here. And it just broke to the upside of its long-term upward trend line. So I think this one's a good one to look into is Vanguard Materials. This is their Admiral Fund. It has super low expense ratio. It's like 0.1. This is the kind of the returns. Not that I really care about this per se for the long term because the next 10 years, I think this is going to do very well. This is the growth of the hypothetical $10,000. But these are the companies that they own. I like some of these companies like Freeport-McMoRan. Lind is a good one. Air Product Chemicals. These are all going to do, I think, pretty well in a commodity boom. And if you look at some of this like Sherwin-Williams and all these other things, if you're in a real estate boom, these are also going to do well in a real estate boom. So I think they've got a pretty good holdings for this next 10, 15 years. The next one, Vanguard Utilities Index Fund, VUIAX. I'm choosing a lot of the Vanguard stuff because the expense ratios are super cheap. You can see this guy's been moving quite good to the upside. Kind of got kicked off its rails here, but guess what? We're breaking this pattern here. We may even see a little bit of a back test, and then I think we're going to move on up. Now, why am I interested in the utilities? The utilities, I think, are going to go up if they try to move into a renewable world, and they're going to try to do electric vehicles. Electric vehicles is going to shift demand from gasoline engine, gas, over to electricity. So I think utilities could be a really good bet, especially if they're going to throw a bunch of money at them from these, we'll call it infrastructure bills. So this is one that I'm invested in. Here's the performance. It's pretty stable over time. This guy's just been walking higher. NextEra Energy, that's one of a big boy for utilities that people like it to invest in. And then we've got all these other utility companies that I think will do pretty well worldwide. Next is the Vanguard Healthcare Index Fund that I own. If you look at people, the baby boomers, they're getting a little bit older. They're going to be spending a lot more money on healthcare. Healthcare is a very good spot to be. It seems like it's pretty inflation resistant. It seems like that's always the thing that's increasing the most. And I think the need for the healthcare index is going to go way higher. We are in this, call it transitory position where baby boomers are getting older and are going to need more healthcare. And then on top of it, the millennials are going to have a lot more kids, which means they're going to have a lot more healthcare needs. So I have this in my portfolio. It's the Vanguard Healthcare Index, VHCIX. It is a very low cost expense ratio of 0.1. And these are the companies that this fund holds. It's got very good returns going, since inception, about 11%, but they've been kicked up here recently. Johnson & Johnson, United Health Group. So they've got healthcare insurance companies and providers and manufacturers. So I think this is a really good one to look into if you want a healthcare one. Now here's Global X Copper Miners ETF. This is one that I like kind of it in this area here when it broke this big, large downtrend and back tested. And now we're heading on up. They always create these U-shaped patterns as they go up. It's almost like it's going to create this gigantic cup and handle pattern, almost. And this one's looking pretty good. You look at the volume down here. It's looking good down here. Everyone's accumulating it. These are the top holdings in it. I like a lot of these companies. Ivanhoe, Glencore, Lundin Mining Group, Freeport-McMoRan, First Quantum. These are a lot of big boys, and they're going to make a lot of money. Copper-wise, copper is going to be insane. They're going to try to do this renewable world and electric vehicles. I'm going to be heavily exposed to copper. So that's one that you might want to look into. It's COPX. Here's another one, VGPMX. This is the Vanguard Global Capital Cycles Fund investor. This is kind of like their precious metals. You can notice that we've got this nice big downtrend lines that are being broken, another downtrend line that's being broken. This thing's starting to, think of this as momentum. The momentum was kind of strong to the downside. Now it's kind of flattening out. You can see this downtrend line is flat. It broke to the upside, and I think this is going to move quite substantially to the upside. So what are some of the holdings in here? This is the average annual returns. You can see it's a lot recently, but it's been kind of down. You can see this thing starting to just turn up to the upside. Once it breaks this big move here, I think we're going to see a big move higher. Now, this thing's got a variety of assets in it. Anglo American is a copper. It's even got some coal, I think. Platinum, PGM metals. We've got some other financial corporations in here. They also do well during a real estate boom. We've got Power Grid Corp of India. BHP Group is a mining company, diversified mining company that I like. I like Glencore, Medical Property Trust. I mean, this thing's it's diverse, but it has a lot of really good things in it for a commodity boom. And it's down. This thing is down, but this mix they've got is pretty good. And it has some precious metals companies in it too, like Barrick Gold Corp. It's a very well diverse, I think, commodity type holdings. Here's the Vanguard Emerging Markets Stock Index Fund. You can see this large trend line here. This is over a decade long, back to 2007. This thing ripped it. Emerging markets absolutely ripped it last commodity boom. It was like straight vertical. Then it went sideways during a recovery phase and during a increasing dollar strength. But the dollar's starting to weaken. We broke out of this big downtrend. We came back, kind of doing this back test thing. And remember, I always buy on the back test. So I'm loading up on emerging markets right now for the move higher. This is what's in the emerging markets fund. Since inception, not too stellar, 6.5%, but it's going to kick way up when we move into this commodity boom with the declining dollar. Taiwan Semiconductor Manufacturing, Tencent Holdings, Alibaba. These guys, it's everything kind of overseas, India and China. Dollar gets weak, emerging markets does very well. And here's North Shore Global Uranium Mining. If you guys don't have uranium, this could be one that you want to look at. It's an ETF. It broke out of its long-term trend line to the upside, back tested, and we're kind of moving on up. So this is one that I would be looking into. These are the holdings. So we got 36% rest of the world, 31% Canada, 17.5% physical uranium, that is, US, about 16%. We've got Kazatomprom, Camco, Uranium Participation Corp, Yellowcake, NextGen, Denison Mines, Paladin, Uranium Energy Corp, Energy Fuels, and CGN Mining up in China. So that's what the holdings are here. Those are the ETFs that I would look into, and then I own a lot of these myself. And if you guys want to take a different view and not do the individual stocks, these are mutual funds and ETFs that I would look at. Right now, the ones that look very compelling to me, URNM, uranium it's way down there. Emerging markets looks really good at right now, and the rare earth metals looks like really, really good. Copper's looking good. These all look really good. And I own almost all these. I don't own all of them, but I don't own URNM because I buy the individual stocks. But I do own the rest. And I was looking for low costs, good returns, good companies that they hold in their top 10 holdings. These are the ones that I found over time. I think they're all going to do, I think, very well over this next commodity bull market. Hopefully this helps you with your research. I know some of you guys don't want the individual stocks. Here's your mutual funds and ETFs for a commodity bull market. Thanks for listening. This is Finding Value.